Retail sales fell by 0.2% in October. Let's dig into the numbers with Randall Bartlett. He's Deputy Chief Economist at Desjardins. Thanks for joining us today.
Oh, my pleasure. Thanks for having me.
So less spending on clothing, food and drinks. Was there any specific reason you saw for lighter sales in those categories for October?
Yeah, actually, so food and beverage was very much focused on what we saw in BC. So we saw that we look at what was going on with sales of beer, wine, liquor retailers. Is very much a function of labor disputes in BC that held down that category, and ultimately we do expect that to come back in November as the strike ended in the middle of the month, and ultimately shouldn't be something that's like a long-term drag on retail sales. On the clothing side, I mean, not a ton to read into it. We thought that ultimately at the end of the day, broadly sort of a reflection of the broader weakness we're seeing in the Canadian economy, in part because of the obvious uncertainty coming from the trade war with the U.S., but also the headwind to the Canadian economy from slowing population growth.
Okay, so let's look at what Canadians were buying. Let's start with furniture and appliances, so the big ticket items.
Yeah, we've seen that when it comes to furniture and appliances, this is a trend we've seen, across categories where it broadly seems to be a reflection of housing market that's, not declining anymore, but it's sort of grinding sideways as we've seen sales activities sort of middling over the last few months, and so very much a reflection we think of a housing market which is shaking off some of the uncertainty from earlier in the year, but it's still subject to weakness in the Canadian labor market, and also the headwind that is interest rates and stretched affordability in Canada.
What about vehicles, though? Did that make sense to you coming back in the fall? Perhaps more of the tariffs unwinding, people felt better about buying cars?
Yeah, for sure. It's one of those things where we saw a lot of purchases move forward to the end of 2024, beginning of 2025, as folks wanted to take advantage of vehicle rebates at that time, get ahead of the tariffs. But now that we've seen some of the counter tariffs come off of Canadian imports of motor vehicles on the U.S. content from the U.S., we've seen that it's got a little bit easier, we think, for Canadians to purchase those vehicles. Additionally, what we've seen is that again, like the labor market hasn't been as weak, I think, as a lot of folks anticipated earlier in the year. Income growth has been stronger, and so all of that sort of supported a bit of a rebound in auto purchases in October, particularly relative to the big drag we saw in September. But we're not necessarily out of the woods yet, as we still have those headwinds of the trade war that hangs over the Canadian economy and that declining population growth in Canada.
The advanced estimate, as you know, showed a rebound for retail spending in November, but are early estimates reliable?
Early estimates are generally quite reliable. I mean, we saw that retail sales fell by 0.2% in October. The flash estimate was for a flat print, so it came in a bit weaker, but it was still fairly close to the actual number. Generally, it's a pretty good read on where things are going. It accounts for about 60% of retail sales, so it is likely to be somewhat different, but seems to account for the bulk of it. And when we unpack that number, it looks like about half of it was probably prices when we look at the seasonally adjusted CPI for goods. And so the rest of it is going to be volumes for November. So suggests a bit of a tailwind to November GDP growth as well.
Okay, so would you start or expect to start seeing some of the holiday spending build up in that month?
Yeah, so we are going to start to see that in November with Black Friday. So that's going to be part of that calculus, and then continuing into December. Always a bit of a tough read is to get a sense of what's happening on a seasonal basis. This data is seasonally adjusted, so it will pick up the strength going into the holiday season already, just adjusting for what the typical spending pattern is. So we'll see what that looks like going forward. Last year we had the GST rebate, you'll recall, that started in the middle of December, the GST holiday rather, that allowed for some GST to be removed on some consumer items like toys and games, as well as eating at restaurants. And so we'll see how that plays the seasonal factors and how that affects the data in December rather, going forward.
We also have a declining population in the sense of immigration has been sort of held or moved down for targets, especially with students. I'm wondering what your outlook and how your outlook has changed as a result of that change in population.
Yeah, so the read we got on Q3 population was much weaker than we had anticipated, and was much closer to what the federal government would need to see in order to hit its targets. And so we've been reevaluating our forecast since then, and we're still of the view that population growth is probably not going to be as weak as the federal government's targets would suggest, but it is going to be weaker than we previously anticipated, and we'll be putting out our updated population projections very early in the new year to walk folks through where we think things are going.
All right, Randall, I'm going to leave it there, sir. Appreciate your time. Randall Bartlett, Deputy Chief Economist at Desjardins.